Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this lesson I'm going to show you a bunch of trades where we bought options using our technical-based approach last week, and I'm going to show you how, done properly, buying options offer superior advantages over trading the underlying stock or ETF. As technical-based traders, to trading anything that moves, including options, because options are just a derivative of the underlying, we need a compelling pattern. That is our starting point. Then we take this compelling pattern and we apply our other concepts that make up our approach. So we see, where is it in connection with the overall trend on multiple time frames? Is it on support or resistance? Is it showing relative strength? What are the broader markets doing? And then we simply enter and manage in between. So what is an option? A buyer pays money and you have the right to buy the underlying stock or ETF on or before expiration at an agreed upon strike price. So we are controlling our bullish bias when we buy call options, and we profit from our directional bias with leverage and limited risk. Because whether you're buying options or stock, the max you can lose is the cost that you paid for it. And if you're paying less for this levered instrument, then that's losing less. And a third benefit is, if we are stopped out the majority of the time using our approach, you're going to lose less money buying options as opposed to owning the underlying stock. Now, we also sell options to profit from the time decay of calling a short-term top or bottom. I'm not going to be discussing that strategy today, but we do that very successfully and actually have a separate advisory letter, the Weekly Options Trader, where that's all we do is sell short-term expiring assets around compelling patterns for weekly income. All of our daily charts are this clean. We have red and green color-coded candlesticks and volume. We use the blue as the 20, green 50, red 200 period moving average, just to speed up the analysis that we can visualize what's going on multiple time frames and in multiple trends. So this had a big gap breakout, pulled back to support, the converging 50 and 200, broke out again, and now this is what we call a price void, a momentum move down. So you could have traded this initial bounce, and then this is what we're calling a W bottom. It's a retest of this after it retraced less than a third into the price void, and we're looking for bullish reversal, some type of retest. Exactly what we have here. So over this bar's high, we bought the in-the-money $25 calls, expires July 21, paid $3.05 a share. So one contract represents 100 shares. So if you bought just one contract of this NTNX call, it would cost $305 plus commissions. So we have the right to buy the stock at $25 on or before that expiration, but we're just going to manage them per the charts as we do everything. So we bought the calls here, and then in this beautiful rally, we were in this just 2 days. We sold this, you can see here, we sold half for $410. We made a 34% return on capital just in 1 day. And then the midpoint was this, and we decided just to sell it, take our money into the close, 39% return. APA here, beautiful bottoming pattern. You see the 20 and the 50 flattening out. Here's my big price void over here, and I have a closing breakout bar and a bullish inside bar. That's what we call a 1, 2, 3 continuation from a bottoming pattern. We bought in the money calls for $2.15, and we sold them in 2 different lots, made 109% return just in 2 days there. TPX, this is what's called a buy setup. Again, notice how the 20 and 50 multi-month consolidation, it broke out here. Now I have a pullback. This is what's called a master trader buy setup, bullish reversal. Look to the left, there's nothing over here. So that's a beautiful price void. It allows for a big move up. I would have to look further to the left here or on a weekly chart to see where the significant resistance is. But another 2-day swing trade, 47% return. Dunking here, DraftKings, same, strong uptrend, rising 20, rising 50, pullback, nice bullish reversal here. We bought call options over the high of this bar. We bought the in the money 25.5 calls for $1.60, 157% return in a simple 3-day swing trade. Satish here, a little sloppier, but it broke out. I have rising 20, rising 50, rising 200, nothing to the left. We had a bullish market environment last week, which is why we predominantly were buying call options, of course. We bought call options over the high of this bar, stop under the low, simple management, 40% return in 3 days. This one broke out. Look at my moving averages again. Look at my price void. Do you see the theme here? Now, we like to buy in the money calls for swing trades because you're paying less time decay. Now, I get into all this of what's the right one to buy. Do we do just long calls? Do we want to do a spread to lower our cost basis? How many days to expiration do you need? We teach all that, of course, in the full option seminars. So this broke out here. We just had a nice little four-day return there. 22%, and it's actually another buy setup now. So this one's actually on my list for this week. It's a buy setup on support after a breakout above the 20-period moving average. Buy setup 20 above the 50 FLS over the high of this bar. We bought, little gap down negated, bought in the money $35 calls, 242. Nice 5-day swing trade, 44%. This was the only put option we bought last week because of the bullish market environment, but this is a breakdown. And what I call here TT is a topping tail, and the reason I call that a tail is that notice that at the high of this bar, it was green. So it was a bullish, it was a breakdown failure. But at the end of the day, it closed with a topping tail under the open near this. So once it gapped down the next day, that's a gap breakdown with a price void. Look to the left, there's insignificant support. So we buy in the money put options, which allows us the right to sell the stock at the $73 strike price on or before expiration, and the value of these puts go up in value as it falls. So this fell beautifully in one day. Look at this. We sold a third of our position for 91% return in 25 minutes. We sold another third into the close, gapped up a little bit the next day and started rallying, so we just took our money, and 82% on a little 2-day trade there being long put options. If you'd like to get trades like this, stock and option trades, detailed market analysis over the weekend, Greg Capra using our techno-fundamental approach, go to mastertrader.com/advisory swing, and we have a no-brainer 1-month-long trial, $37. Any questions, email my partner Greg or me, and look forward to seeing you in the next trade review video.